Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, March 19th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now what you see is price basically holding right in the zone here after dropping away from the recent highs. Here's the recent high right there. That was an important high where price pushed into that area early last week, failed to hold, and by the end of the week had closed below that zone. That suggested we were likely headed back to at least the midpoint, which is 2703.75. And so far we've gotten a downside break from the narrow range that we've developed here over the last several days. Overall, we're holding at the moment off of the recent lows here, 2720s, and that could provide a little short-term support, but any bounce could be a selling opportunity for a continuation toward 2703 and maybe to the opposite edge of the range, which is this recent low here, 2650 or so. That could lead to a push even beyond that low, just kind of what we saw here with the new high. That could take us into 2616, that recent low. So again, remember, the idea was after we had this big impulse sell-off, we were likely to bounce back toward the mid. Any rejection would carry you across to the mid, but for the most part we were going to stay in the middle 50% of that range, and that so far has played out. There's the middle 50% right there. We've stayed mostly inside that range. That's an energy building phase. We could continue to develop within this range here, and until we're ready to see expansion. We probably have several more months of expansion, but right now the fact that we rejected off this recent high suggests at least a move to 2703 with a shot at retesting this recent low and perhaps pushing new lows as well. That could then create a rebound back toward the middle as this thing continues to trade around that trading range. So continue to watch ES off the edges. If we take a look here at the NQ, there it is. One thing we talked about with the NQ was much cleaner. 7K was really the level. That's the level we talked about Friday in the pre-market report. We talked about this tightly coiled action here. You can see it finished with a tight 5-day ADR range. 1, 2, 3, 4, 5 days. Very narrow compared to what we've seen here recently. And we're seeing a downside break now. So I mentioned before that price was attempting to hold above the top of this key range when it broke above it. And if it fails to hold above that top of that key range and breaks below 7K, we could be looking at a drop back to 66.53.75. So that's what we talked about Friday pre-market. So far, that's looking like that the bears are attempting to make that come to fruition. So any pullback or bounce back above 7K could be an opportunity for bears to defend and extend this thing to 66.53. Again, we've been in an uptrending market for the most part, so any pullback could be a buying opportunity. At some point we may see some strength come into the market. Is it going to be off the previous month's close? Is it going to be off of the 66.53, perhaps the LVN? Where's it going to be in this zone? So we have to continue to watch to see where that bounce may occur. But for right now, failing to hold above 7K suggests a move as deep as 66.53. Alright, let's take a look here at crude oil. Now crude, we were talking about how tightly coiled this range was here. Very, very tightly coiled. Playing out right to the apex of this pattern here. I mentioned that usually when you see a range that's that tightly coiled, what you can see is oftentimes is a failed breakout in one direction before it goes in the opposite direction. So I mentioned if price were to break out to the upside and fail, that could lead to a swift move in the opposite direction. Same thing can happen on the downside. It could come down here, try to break and fail, and that would lead to a rally. But for the most part, the idea right now is that we've been chopping around this midpoint for so long. At some point we're going to see an aggressive move to one edge, either to take out that high or to take out this low. And when that move occurs, it's going to be really, really quick and aggressive. It's going to continue until you see rejection, perhaps a higher low or a lower high, wherever you are. And from there, you may see a bounce right back to the center of that range. Boom, boom. So we'll be looking for this aggressive breakout. Right now it appears that price is above the previous month's close right now, but again, Price has never been too far away from that level. It comes right back, snaps right back to that level. So for the most part, we're still chopping around this area, so I'd be cautious until we start to see an aggressive move. Holding above 62 would suggest attempting to extend this thing a little higher. So that's going to be an interesting pivot to watch. All right, let's take a look here at gold. Gold has gotten pretty quiet here for the most part. Not really seeing a huge break just yet. It has a rounded top. You can see kind of the support right here where that level's been defended multiple trips. Nice rounded off pattern. This type of pattern has a tendency to break to the downside, but in either direction it could be significant because overall it's compressed to a point where something has to happen one way or another. But usually when you see this occurring, this is an indication that bulls here that are defending are getting paid less and less and less now, and at some point they're going to become exhausted. Their downside sell stops will trigger a momentum move lower, and you're going to hit value at 1280 and the recent pivot low at 1240. So that's an idea here that could play out rather swiftly once this thing decides to go. So again, that 1300, 1305 zone is very important to downside price discovery. Until then, we could see more chop, so it could be a rather quiet type of trading activity here until we're ready to see expansion. Let's take a look here at XBT. There we go. That's XBT here. This one is still holding below the key range low. Here's 9K. This was a very important level that I mentioned, in terms of market structure needed to be held, and bears were unable to hold it here late last week and close below it. That's not very bullish overall. There has been quite a bit of support of prices below 8K. You can see here the first time around, and now when it dips below 8K, it's been bouncing. But overall, this thing doesn't appear like it's eager to see a big bounce in this zone. It's been hesitant to move. It's below the 8 period, which is this golden level right there. That's a very clear indication of short-term price direction, and it's been resistance for a while since it took it offered. So again, that's a very important level. So again, that kind of points to 9K. Can price get back above 9K? Right now we have a narrow range on a 3-day range basis. A break back above 9K could open up a move back up, which was the intended move back here, but a failure occurred. Failure to get back above 9K will start to really stretch and retest those recent lows, which is not too far off. So we'll keep an eye on Bitcoin as it continues to progress. All right, that's it for now. Premium members, we're back to our current schedule here this week. Looking forward to seeing you in the trading room. Take care. We'll see you soon.